Hello students, this video is my fifth video for the chapter Holding Company Accounts. For a better understanding of this chapter, kindly watch my previous videos for this chapter, for which I'll give you the links in the description. Today, I am going to work out a problem involving adjustments relating to mutual obligation and revaluation of assets. How to work out a problem involving mutual obligation is not new to you, because in my previous video I have already worked out a problem involving adjustments relating to mutual obligation. What is new today is I am going to teach you regarding how to treat revaluation of assets. When I say revaluation of assets, it may relate to either overvaluation of assets or undervaluation of assets. Both this will affect only the calculation of capital profits. In case if there is overvaluation of asset, to bring the asset to its original value, the overvalued amount will have to be deducted while calculating the capital profit. If you have undervaluation of asset given in the problem, to bring the value of the asset to its original value, the undervalued amount will have to be added along with the capital profit calculation. Let me explain all this to you with the help of a problem. Let me proceed with the problem now. I will read the problem first. From the following details, prepare a consolidated balance sheet of H Limited and its subsidiary S Limited as on 31/12/2021. So you have the details given relating to H Limited and S Limited, namely the holding company and the subsidiary company. Liability side, share capital, shares of rupees 10 each, 2,60,000. General reserve, 50,000, 15,000. Profit and loss account, 25,000, 21,000. 16% debentures in H Limited, 70,000, in S Limited, nil. Creditors, 15,000, 10,000. Bills payable, 5,000, 9,000. On the asset side, buildings, 1,45,000, 50,000. Plant, 60,000, 25,000. Stock, 40,000, 10,000. Debtors, 35,000, 15,000. Bills receivable, 15,000, 10,000. Bank, 10,000, 5,000. Investment in 4,000 shares of S Limited in H Limited's column, 60,000, and nil in S Limited column. The balance sheet total is H Limited 3,65,000 and S Limited 1,15,000. On the date of acquisition of shares by H Limited in S Limited, the latter had undistributed profits of 9,000 and reserve of rupees 6,000. The value of buildings and plant of S Limited were considered at rupees 65,000 and rupees 16,000 respectively. No purchase or sale of these assets after the acquisition of shares. Depreciation may be ignored. Debtors of H Limited include rupees 5,000 due from S Limited, and also bills payable of H Limited includes a bill of rupees 3,000 accepted in favor of S Limited. So this is what is the problem we have, and from the information given in this particular problem, you are asked to prepare a consolidated balance sheet. So what are you supposed to prepare here? You are required to prepare a consolidated balance sheet of the holding company H Limited and its subsidiary S Limited. This is a problem involving two important adjustments. One is adjustment relating to revaluation of assets, and the other one is adjustment relating to mutual obligation. In my previous video, I worked out a problem involving mutual obligation. But in this problem, in addition to mutual obligation, we have revaluation of assets also. So let us see how to solve how to work out the problem and how to arrive at the solution. So let us do everything step by step as usual. The first step we have is calculation of holding minority ratio. So let us find out how much is the holding minority ratio here. For this, you have to have a look at the asset side of the balance sheet given. On the asset side, you have to see investments. So what is given regarding investments? You are given investments in 4,000 shares of S Limited. 4,000 shares of H Limited. So, H Limited is investing in 4,000 shares of S Limited. Okay. So, let us see how many shares are there in S Limited first of all. So, for this, you have to have a look at the liability side of the balance sheet. On the liability side of the balance sheet, you have the item share capital. So, let us see how much is the share capital for S Limited. So share capital for S Limited is given as 60,000, right? This 60,000 is in shares of rupees 10 each. So when you say shares of rupees 10 each, and when you say the share capital is 60,000, what will be the number of shares? 60,000 divided by 10, 6,000 shares will be there. So how many shares will be here? You will be having 6,000 shares. 6,000 shares, is it not? So 6,000 shares, out of 6,000 shares, the H Limited is investing in 4,000 shares of S Limited. Okay. So that means 6,000 minus 4,000. The remaining 2,000 shares are taken up by the outsiders who are called as the minorities. So the ratio here will be 4,000 is to 2,000. 4,000 is to 2000. So 4,000 is the number of shares which H Limited has invested in S Limited, and 2,000 is the number of shares taken by the minorities. So the ratio will be 4 is to 2, which will ultimately become 2 is to 1. Okay, I hope you are clear with this. Now, let us proceed with the calculation of capital profit. That is the next step. You all know very well what is meant by capital profit. The profit existing on or before the date of acquisition, that is only called as capital profit, and the other name for capital profit is pre-acquisition profit. So let us see what is the information available regarding capital profit. Okay. So just see the sentence you are given on the date of acquisition. On the date of acquisition of shares by H Limited in S Limited, the later had undistributed profits of rupees 9,000 and reserve of rupees 6,000 and reserve of rupees 6,000. So on the date of acquisition, there was already an undistributed profit of 9,000 rupees and reserve of 6,000 rupees. So what is existing on the date of acquisition is called as a pre-acquisition profit or capital profit, isn't it? So let us write it. Profit and reserves existing on the date of acquisition. Profit is 9,000. Reserve is 6,000. So when you add these two amounts together, 9,000 plus 6,000 will give you 15,000. And what is this 15,000? That is the amount which is available as on the date of acquisition. With this is a problem involving overvaluation and undervaluation of assets. If you have any undervaluation of asset, that has to be added. And if you have any overvaluation of asset, that has to be deducted while arriving at the capital profit. Okay. So let us see what information we have relating to this overvaluation and undervaluation of asset. See the problem, all of you. You are given the value of, see the sentence, just once again. You're given in the problem the value of buildings and plant of S Limited were considered at rupees 65,000 and rupees 16,000 respectively. So what is the value of building? The value of building is considered as 65,000 and the value of plant of S Limited is considered as 16,000. So this should be the actual value. But let us see what is the value of building as per the problem. Okay, as per the problem, just have a look at the problem here. As per the problem, the value of building of S Limited is given as how much? It is given as 15,000. This is the amount we have. It is given as 50,000. 50,000. What is the information given in the adjustment? You're given the value of building has to be 65,000, right? So it has to be 65,000, but what is available as a book value as per the problem is only 50,000. So what are we supposed to do here? There is undervaluation. Actually, it should be 65,000, but it is given only as 50,000 means there is undervaluation of building. So that amount of difference will have to be added. 65,000 less 50,000, the difference is 15,000. Add this 15,000. So write as add undervaluation of building 15,000. So already we have 15,000 here. With this 15,000, if you add this 15,000, now we'll be arriving at an amount of 30,000. Okay. Then after this, there is one more asset which we'll have to consider here. What is that? Just have a look at the problem. It is given that the value of plant of S Limited is considered as 16,000 rupees. So how much it is? It is 16,000. But let us see how much is given in the problem. The value of plant as per the problem is 25,000. As per the problem, the value of plant is 25,000, but its actual value is 16,000 only. So what are we supposed to do? Here we have overvaluation of plant. So to bring it back to its original amount of 16,000, we will have to deduct 9,000. How did you get this 9,000? It's a difference between 25,000 and 16,000. So 9,000 represents overvaluation of plant, which has to get deducted from 30,000. So when you deduct 9,000 from 30,000, now you'll be having 21,000, and this 21,000 is capital profit. I think I'm making it clear. So we have arrived at the capital profit now, isn't it? Now, what are we supposed to do after arriving at the capital profit? It has to be divided between the holding company and the minorities by applying this holding minority ratio 2:1. So let us apply this ratio 2:1 and divide the capital profit between the holding company and the minorities. So 21,000 into 2 by 3 will be the holding company share in capital profit. This will give us how much? This will give us rupees 14,000. Okay, and then the minority share will be rupees 21,000 into 1 by 3. So rupees 21,000 into 1 by 3, this will give us rupees 7,000. So this is how 21,000 is getting distributed. That is, the capital profit is getting distributed between the holding company and the minority. Now let us proceed to the next step. The next step is calculation of what? Calculation of revenue profit. Okay. So let us see how to calculate the revenue profit. So we have to take into account the general reserve and profit of S Limited on the date of the balance sheet. Just let us see here. So on the date of the balance sheet, you are given the general reserve of S Limited as 15,000 and the profit and loss account of S Limited as 21,000. So these are the amounts of general reserve and profit and loss account of S Limited on the date of the balance sheet. So let us enter those amounts now. 15,000 general reserve and 21,000 P&L account. So here it has to be 2021 actually, not 2022, it should be 2021. Okay. So now when we add these two amounts together, we get 36,000. 36,000 is the amount of general reserve and profit and loss account of S Limited on the date of the balance sheet. Okay. But out of this 36,000, we already had profits and reserves existing on the date of acquisition as 9,000 and 6,000 respectively. This actually represents the capital portion, so it has to be deducted. So from 36,000, deduct 15,000. Okay, so from 36,000, you have to deduct 15,000. This will give you 21,000. How much will you get? You will get 21,000. So this is a peculiar problem where you get the capital profit as well as the revenue profit as the same amount itself. Okay. Anyway, let us proceed further. So we are dividing the revenue profit by applying the holding minority ratio 2:1. So holding company share and revenue profit will be 21,000 into 2 by 3. So this will give us rupees 14,000. And minority share in revenue profit will be 21,000 into 1 by 3, which will give us rupees 7,000. Okay, so we have divided the revenue profit between the holding company and the minority. Now let us proceed with the next step. What is the next step? The next step is calculation of minority interest. I hope you all remember how to calculate the minority interest. For the purpose of calculating the minority interest, first you have to take the minority share in share capital. With that, you have to add minority share in capital profit. Then you have to add the minority share in revenue profit. Whatever total you get, that will be called as the minority interest. So let us see how much is the minority share in share capital. Actually, S Limited had 6,000 shares. You can refer to the problem for this. Out of those 6,000 shares, H Limited invested in 4,000 shares of S Limited. So 6,000 minus 4,000, 2,000 shares are held by minorities, namely the outsiders. So minority share in capital profit will be 2,000 into 10, which will give you 20,000. With this, you have to add minority share in capital profit, which is 7,000. Then you have to add minority share in revenue profit. How much is minority share in revenue profit? That again is 7,000 only. Add minority share in revenue profit 7,000. So this will give us a total of 34,000. 34,000. So how will you call this 34,000? This 34,000 will be called as minority interest. Now let us proceed to the next step. The next step is calculation of goodwill or capital reserve. So let us do the calculation as per the procedure. For this purpose, first we have to take the amount paid by the holding company for acquiring shares in the subsidiary company. Amount paid by holding company H Limited for acquiring shares in S Limited. Let us just have a look at the problem for this purpose. So we have to see the asset side, investment. So when you have a look at the problem on the asset side, investments, you are given investment, just see here, investment in shares in 4,000 shares of S Limited. Investment in 4,000 shares of S Limited, 60,000. So the amount paid by H Limited for investing in shares of S Limited is 60,000. So let us take that amount. So write as, just write this, amount paid by H Limited for acquiring shares in S Limited, 60,000. Okay. From this, you have to deduct the face value of shares purchased. How many shares were purchased? In how many shares did H Limited invest in S Limited shares? 4,000 shares. So 4,000 into what is the face value? 10 rupees. So 4,000 into 10 is 40,000. And one more item has to be deducted, that is holding company share in capital profit. How much is holding company share in capital profit? It is 14,000. So when you add these two amounts together, 40,000 plus 14,000, you get 54,000. You all know very well If you get a negative answer, that will be called as capital reserve. And if you get a positive answer, that will be called as goodwill. So what are you getting? Are you getting a negative answer or a positive answer? You're getting a positive answer, isn't it? 60,000 minus 54,000 is 6,000. So this 6,000 will be called as what? It will be called as goodwill. So goodwill is 6,000. Okay, so step by step we have done all the calculations. And what are the various items that are to be calculated here? I think you know very clearly. First we have to find out the holding minority ratio, then we have to find out the capital profit, then we have to find out what? The revenue profit. After finding out the revenue profit, we have to find out the minority interest, then we have to find out goodwill or capital reserve, as the case may be. Now, before we proceed with the preparation of the consolidated balance sheet, we have to first finish off the notes to accounts, right? Let us start with note number 1. You must be familiar with the format of the balance sheet. Only then you will be able to do this. I hope you are already familiar with this, because in the previous videos and all, I have told you clearly how to do the balance sheet. You can refer to those videos for clarity, okay? So, note 1 we have is share capital. For the purpose of share capital, you have to look at only H Limited's share capital. Okay, that only will come while preparing the consolidated balance sheet. So you can refer to the problem for this. So what is given in the problem? Just see the problem, all of you. So you're given share capital, H Limited's column. How much is there? 2 lakhs, which means 20,000 shares of rupees 10 each. That alone will come as note 1 now. Okay, so let us enter share capital 20,000 shares of rupees 10 each. It gives us 2 lakh. Then next note 2 is reserves and surplus. Under reserves and surplus, we will have the general reserve and P&L account of H Limited alone, because S Limited's general reserve and P&L account we have already treated. Okay, you can refer the problem. General reserve of H Limited is given as 50,000 and P&L account of H Limited is given as 25,000. In addition to the P&L account of H Limited 25,000, you have to add the holding company's share in revenue profit. How much is that? 14,000. Okay, so 25,000 plus 14,000 will give you 39,000. Okay, already you have 50,000 in general reserve. Now you are going to add 39,000 with that. So 50,000 plus 39,000, you will get a total of 89,000, which will come in the outer column. So this will be the amount of reserves and surplus as per note 2. Now, note 3 we have is long-term borrowings. Under long-term borrowings, refer to the problem. You have 16% debentures only in H Limited's column. That 16% debentures will come as it is, which is given as 70,000. Kindly refer to the problem for this. Then next one is trade payables. Under trade payables, we'll be having creditors. You are already given creditors in the balance sheet. Creditors of H Limited is given as 15,000. Creditors of S Limited is given as 25,000. Okay. So when you add both these amounts together, you will get 25,000. From this 25,000, you are supposed to deduct the mutual obligation. So let us see what is given in the problem relating to mutual obligation. Just see the problem here. You are given, just see the problem. You are given debtors of H Limited. Debtors of H Limited include 5,000 due from S Limited. And there is one more mutual obligation, and also bills payable of H Limited includes rupees 3,000 accepted in favor of S Limited. So these two amounts are the amounts relating to mutual obligation. So first, you are given debtors of H Limited include 5,000 due from S Limited, isn't it? So that 5,000 will have to be deducted as mutual obligation. So write as less mutual obligation 5,000. Okay. So from 25,000, if you deduct 5,000, you'll be getting 20,000. That is regarding creditors. Then as far as bills payable is concerned, bills payable of H Limited is given as 5,000 and S Limited is given as 9,000. So it gives us a total of how much? 14,000. Again, from this 14,000, you have information relating to mutual obligation, isn't it? So, what is the information you had relating to mutual obligation? The problem you are given, bills payable of H Limited includes a bill of 3,000 accepted in favor of S Limited. So, this amount is a mutual obligation which will have to be deducted from which item? From the item bills payable. So the same amount will be deducted from bills receivable on the asset side. So less mutual obligation 3,000. So 14,000 minus 3,000 will give us 11,000. So 20,000 plus 11,000 will be getting 31,000. So what is this 31,000 actually? 31,000 is actually note for trade payables. Okay. Now let us proceed with the next note. Note 5, tangible assets. So under tangible assets you will be having fixed assets, right? So tangible assets, first you have building. H Limited is 1,45,000 and the revalued amount of buildings now is 65,000. So take that into account. 1,45,000 plus 65,000 will give us 2,10,000. Then plant of H Limited is 60,000 and the revalued amount of plant is 16,000 now. So add these two amounts together, 60,000 plus 16,000 will give you 76,000. So now when you add 2,10,000 and 76,000, you get a total of 2,86,000. So what is this 2,86,000? 2,86,000 is note 5, tangible assets. Now, let us proceed with the next note. Note 6, intangible assets. One thing I am telling you repeatedly, you can't do all this correctly. You can't prepare the consolidated balance sheet correctly unless and until you are familiar with the format of the balance sheet. You have to know what are the various notes to be prepared and which item will come under which note. Okay, so note number 6 is intangible assets. Under intangible asset, we'll be having goodwill which we calculated. Okay, so goodwill 6,000 will come. That is note 6. Note 7 is stock. Stock of H Limited is 40,000. Stock of S Limited is 10,000. It is given in the problem. So when you add these two amounts together, 50,000 is stock. So this is what is note 7 stock, which is 50,000. Note 8 is trade receivables. Under trade receivables, you will have debtors of H Limited is 35,000, of S Limited is 15,000. When you add both these amounts together, you will get 50,000. From this 50,000, there is mutual obligation. We deducted 5,000 from creditors on the liability side, isn't it? The same 5,000 will have to be deducted from debtors on the asset side. So less mutual obligation 51,000. So 50,000 minus mutual obligation 5,000 will give us 45,000. How much is mutual obligation? 5,000. 50,000 minus 5,000 will give us 45,000. The next we have bills receivable H Limited 15,000, S Limited 10,000. The total is 25,000. From this you have to deduct mutual obligation. Already we deducted 3,000 from bills payable on the liability side, isn't it? Now we have to deduct 3,000 from bills receivable on the asset side. So 25,000 minus 3,000 will give us 22,000. Okay. Now let us find out what is the total of this note, that is note 8 trade receivables. 45,000 plus 22,000. So this will give us a total of 67,000. So 67,000 will be note 8. Now we have come to the last note, note 9, cash at bank. We'll just have a look at the balance sheet, okay? Just one second. See the balance sheet. See the balance sheet. How much is given as bank? 10,000 and 5,000, isn't it? Just see here. You're given bank 10,000 for H Limited and 5,000 for S Limited. Okay. Let us come to the note 9. Note 9. We have bank 10,000 of H Limited and S Limited. This is only 5,000. So it is going to be 10,000 plus 5,000, which will become 15,000. Okay, it's 5,000 only. 10,000 plus 5,000 So it's going to become how much? It is going to become 15,000. So that will be the total of cash at bank. Okay. Now we have prepared all the notes starting from note 1 to note 9. With all these notes, we can very easily prepare the consolidated balance sheet. So let us give the heading Consolidated Balance Sheet of H Limited and its subsidiary S Limited as on 31/12/2021. Okay, I hope you remember the format. First, we'll be writing equity and liabilities, under which first we'll have shareholders' funds. Under shareholders' funds, first will be share capital, note 1 will give us 2 lakhs. This we have prepared already. Then reserves and surplus, note 2, 89,000. We are just entering what we prepared already, right? And then we are supposed to enter as number 2, minority interest. We have already calculated minority interest as 34,000. No note number as such for minority interest, so just put minority interest and take it down. Then under non-current liabilities, number 3, non-current liabilities will be having long-term borrowings, which we already calculated as 70,000. Refer to the note here, 70,000. Then under current liabilities, we'll be having trade payables, that is note 4, that is 31,000. So let us add all these amounts together and see what is the total we are getting. That will be the total of equity and liabilities. Okay, so the total will be 0, 0, 0, 4, 4, 2, 4. 4,24,000. That will be the total of 1 plus 2 plus 3 plus 4. In other words, that will be the total of equity and liabilities. Now let us come to the next part, that is assets. Under assets we have non-current assets. How much? 2 lakh. Under non-current assets we have tangible assets and intangible assets. Under non-current assets, first we have tangible assets. Tangible assets, note 5, it is 2,86,000. Then intangible assets, note 6, which is nothing but goodwill, right? That is 6,000. Then under current assets, we have note 7, stock, 50,000. Then trade receivables, note 8, 67,000. Then cash at bank, note 9, 15,000. So let us add all these amounts together. So you'll be getting 0, 0 again, then 0, then you have 4, 2, 4. 4,24,000. You can total it and see. So the total of non-current assets and current assets together, which come under the main heading assets, comes to how much? It comes to 4,24,000. And how much is the total of equity and liabilities? That also comes to 4,24,000. So it means that our balance sheet total is the same and our answer is right. Okay. So this is how you have to work out a problem when you are given adjustments relating to revaluation of assets and mutual obligations. So I hope you are clear with this answer. Hope you are clear with the problem I worked out today. If you have any doubts, you can post your comments. If you like this video, subscribe to my channel and also share the video with your friends. Thank you very much for watching this video.